Hey everyone, Ann Mowbrey here. Today we're diving into how smart real estate moves can build long-term wealth. The real secret? Making your money work for you passively. One of the best tools for this is the Triple Net Lease, or NNN lease. It's a set-it-and-forget-it strategy. You own the property, the tenant handles the expenses, and you collect steady income. Whether you're a seasoned investor or just starting out, understanding NNN leases can open up new opportunities. I'll break down what they are, why they work, and what to watch for, plus a real-world example. Let's get started. So, what is a triple net lease? In commercial real estate, it's a lease where the tenant pays rent plus property taxes, insurance, and maintenance. Unlike residential leases, you as the landlord aren't stuck with surprise expenses, taxes, insurance, and maintenance. This setup gives you predictable income and fewer headaches. It's common with single-tenant buildings, think banks, fast food chains, or pharmacies. The tenant gets control over the property and you get a hands-off investment. Let's break down the three nets. First, property taxes. The tenant pays them, not you. Second, building insurance. The tenant covers all premiums, protecting your asset. Third, maintenance and repairs. From landscaping to major fixes, the tenant handles it all. This means your rental income is stable and predictable. No surprise bills. You're insulated from rising costs and emergency repairs. The NNN lease turns property ownership into a truly passive investment. That's the magic: steady income, minimal hassle. Let's see this in action. Imagine you own a building leased to Morning Buzz Coffee on a 10-year NNN lease. You collect $5,000 a month in rent, $60,000 a year. Morning Buzz pays all property taxes, insurance, and maintenance, say $12,000, $3,000, and $9,400 a year, respectively. You don't pay a dime for those expenses. Your income is exactly what you expect every month. The tenant keeps the property in great shape because it's their business on the line. You enjoy appreciation and steady cash flow without landlord headaches. That's the power of NNN investing. Why do investors love NNN leases? Simple, stable, predictable cash flow. You can forecast your returns with confidence. No surprise repairs or tax hikes. It's as passive as real estate gets. No late night calls, no tenant turnover. Leases are long-term, often 10, 15, or even 20 years, with reliable, credit-worthy tenants. Major brands often sign these leases, bringing security and peace of mind. You're not just a landlord, you're a partner with established businesses. NNN leases mean less work, more freedom, and a solid path to wealth. That's why they're a favorite among savvy investors. Of course, no investment is risk-free. The biggest risk? Vacancy. If your tenant leaves, you're on the hook for all expenses until you find a new one. Long-term leases can also mean you miss out on rising rents if the market heats up. Some leases include small annual rent increases. Make sure yours does. Location matters. A great tenant in a bad spot is still risky. Always research the tenant's financial health and the property's long-term prospects. Smart due diligence is your best defense. Not every NNN lease is truly triple net. Read the fine print. Some leases shift only taxes and insurance to the tenant, leaving you with maintenance costs. Others carve out expensive repairs like roofs or foundations for the landlord. These imposter leases aren't as passive as they seem. The gold standard is the absolute NNN lease. Tenant pays everything, no exceptions. Always verify every clause and know exactly what you're responsible for. Don't assume, confirm before you sign. Ready to get started? First, educate yourself. Learn the terms, study the market, and understand the numbers. Build a team, a commercial broker who knows NNN deals, and a real estate attorney to review every lease. Don't go it alone. Expert advice is worth every penny. Start small if you need to. There are affordable NNN properties and even fractional ownership options. Always do your due diligence. Research the tenant, analyze the location, and scrutinize the lease. Check the lease term, rent increases, and who pays for what. Remember, a successful deal is made before you buy. Take your time, ask questions, and never rush. The right preparation sets you up for long-term success. Your journey starts with smart, informed steps. We've covered the essentials of NNN investing, how it works, why it's powerful, and what to watch for. The tenant covers taxes, insurance, and maintenance, leaving you with stable, predictable income. We saw how a simple coffee shop deal can deliver true passive cash flow. Risks exist, but with careful research and the right team, you can minimize them. Always read the fine print and aim for an absolute NNN lease. Start learning, connect with professionals, and explore the market. Every smart decision brings you closer to financial freedom. The opportunity is out there. Go make it yours.